Hello everyone, welcome to my channel. My name is Irina. This video is for people who do food deliveries. I do three: Ubereats, Doordash, and Spark. So I will talk mostly about these three. If somehow you already warned my channel before, you might have seen a couple more videos. One was quite a while ago, more than a year ago. And the new one was about 1 week ago. I actually deleted both of them. I will explain in a minute why I did that. I decided to do this video. It's gonna be complete and it's gonna be with all changes for 2025. And of course, mostly it's for people who want to do their own taxes. But even if you take your taxes somewhere, I would say just still watch it, because especially if you're new, if it's your first year doing deliveries, if you want to know which documents you need, like proving your income, which forms you need proving your deductions, those are the things you would have to take to the person anyway. So I'll start with this simplified sort of explanation. Of course, it's not necessarily to know, to be honest, how we get from gross income to taxable income, what's in between. Because if you do, even if you if you take your taxes somewhere, you don't want to know that anyway. But even if you do your own taxes, what you do, you basically choose the program. I use Free Tax USA. You enter all your numbers from your 1099, from other forms, and the program itself calculates. It will transfer all your numbers into 1040, into Schedule C, Schedule S, all other schedule for credits. So, but if you like me, if you want to know what's in between and how everything is calculated, again, this is simplified version. So I invite you to watch the video. We talk about other things too, not just about that. Anyway, we'll start with that. So from gross income, we subtract first, and this is only for self-employed people, like for people that do deliveries in this case. If you work for someone, of course, it's not gonna look like that. First, we do business deductions. This is our miles and maybe some other business deductions you want to deduct. Then you get to net income. This income is used for calculating your Social Security and Medicare taxes. Then we do adjustments. Sometimes they also called above the line deductions. Over here, we'll have some other deductions, including tip deductions, which is new for this year for us. Then we get to AGI, adjusted gross income. This number important for calculating self-employment taxes such as Social Security, Medicare. This number is also important for calculating your credits, and this amount is also important because it will, looking at this amount, the system will determine if you're eligible for certain credits. And after that, we do personal deduction, which is called also below the line deduction. Yes, it might be confusing. We have so many deductions, but it's true. We can do business deductions, which is our miles, and then we can do tip deductions, and then we can do personal deductions. So, and then we'll get to taxable income, on which we will pay income taxes. Over here, Social Security and Medicare is calculated. Over here, income tax is calculated. So, now, why I deleted those videos. The video that was older, like more than a year ago, first of all, it was outdated because I was explaining taxes, I think, for 2023 over there. Plus, I was mostly concentrated on this part, business deduction. I didn't really cover everything. But then about a week ago, I decided to do another video, to make another video about updates for 2025. Over there, I didn't write anything, so I kind of just talk about it. And then after I posted, I realized, I don't think I had too many views anyway, but after I posted, I realized that I made a mistake. Somehow I thought that the new thing, tip deduction, would be in our business deduction like miles, but they are not. They're actually in adjustments. Again, if you're not interested in between things, if you just want to know the end result, it doesn't really matter. You just enter numbers into the tax preparing program, and it will subtract miles, it'll subtract tip, and you'll get to taxable income pretty much with no difference. But if you want to know how much you pay Social Security, and plus it depends on your like net income, where the tip is. So basically why I removed that video, because I made an assumption that the tip deduction will be in this part, but they actually in adjustments. So which again makes difference for some calculations. And then I decided to do this video with my boards to write everything, so it will be visual, it will be better to understand, and I also will get to example with numbers, not my numbers. I make real not much, to be honest. Even before, with miles deductions and personal deductions, I was fine. I would get to zero or even negative amount. Here I would never owe taxes. So now tip deductions are added. For me, it's not going to make difference. I will probably go into negative amount at this step, even before personal deduction. But for some people, they make more. That's a great way to actually get to zero over here and not to owe any income taxes, or to low AGI and be qualified for some credits. So before we go into details over here, I want to talk especially to people that new to deliveries, how our form, the one that we get from forms from Spark, from Doordash, from Uber, look like. Spark and Doordash are pretty clear. It's $10.99 and they would have just one amount, gross amount, done. This year would be different. The only difference, because now they have to show us what part of that amount was our tip, because we can deduct our tip now. But Uber, it's, not always you get $10.99. Like last year, I did get $10.99 for Uber. This year, I only got yearly summary, which you can see in the application, and they actually already uploaded for 2025. Even though they say I'm not eligible for $10.99, it doesn't really matter. You can easily use yearly summary for tax purposes. When you go into your yearly summary, on the first page, you'll see this number, which they called like gross receipts and something like that. And then tax, fees, adjustments, I think this amount, and then this amount. I don't know why they do that this way. From Spark and Doordash, we only get this amount. That's what they pay us. So this is our gross amount, but Ubereats call it net payout. So even though it looks a little bit more complicated, and we don't need to know this part, to be honest, we just need the amount they paid us, which is the case with other apps. So that's how they send it. It's okay. It's not a big deal. When you go into the program itself, like tax preparing program, and if you use, I don't know how it looks with other programs, but I use Free Tax USA. When you go enter your income, you'll see gross receipts again, and you'll see returns and allowances. So you will enter X amount over here for gross, and for returns and allowances, you enter this Y, which is fees and taxes. It is confusing because the way Uber calls it, fees and taxes. And I know that some people think that those are the taxes they already, took from us, but it's not. It has nothing to do with taxes. Those more like a service fee Uber charges us. So Again, when you get a Spark or Doordash, you just enter this amount, gross amount, done. We don't really need that. For Ubereats, again, you enter gross amount minus returns and allowances, and the system itself, we don't enter this one, and the system itself calculates this amount. Honestly, we can enter just this one, like that. But since the Uber gives it in this form, and since there is actually a line in the tax preparing program for that, if it was just one line, of course we would just put this number. But since they do have two lines to put this number, so we just do that. Then you go to the yearly summary second page. Over there you'll see that breakdown that now they give us tip and base rate. Although they do not give breakdown using this number for some reason, like for example, base rate 5,000 and tip 5,000. They break down this one. They say 7,000, for example, base and 5,000 tip. And then they subtract all these fees from 7,000. But it doesn't matter. All we need to know the amount of tip we got. So to use it for deductions. And then on first page and also on third page, you will see miles. So that's easy with Uber. I mean, the form itself is more complicated than 1099 from Spark and Doordash, but at least they include mile over here, miles, which we need. Regarding miles for Doordash, we'll get at the end of February. And for Spark, if you do Spark as well, they don't track our miles. You have to write it down. Or maybe to use like app, the one that tracks miles for you. So now we are here. So we started entering our income, enter it for all three. And by the way, if it's your first time doing taxes for yourself for deliveries, before you start entering income, they will ask you a code. The code is 492000. It's for people like who, for us that do deliveries. 492000. You'll see like a list of codes. You'll just choose this one. So now we go to business deductions first, and that's our miles. As I said, Ubereats put miles in yearly summary, Doordash sends them later, and Spark doesn't give us anything. You can choose to do standard deduction, which is you just enter miles into the program, and the program multiplies by 70 cents and calculates the amount of your standard deduction. Or you can do itemized deduction. Even before you enter miles into the program, you can choose which deduction you want to do, because if you can calculate amount of miles you drove times 70 cents and you get the amount. Or if you want to do itemized, because miles deductions, it's all about our car. Gas, oil change, maintenance, insurance, registration. So if you want to add all those receipts separately and see which deduction is better for you. So entering miles into the system. And then there would be, they give us option to choose some other business expenses. You can put phone, you can put if you bought like insulated bag with your own money. Also, if you pay for the apps that track your miles, you can put those. You can put business meals, business lunches. So you can do some other expenses as well. After we subtract all those, we get to net income. So now the net income is multiplied by approximately 15%, and that's going to be our it's going to be the amount of self-employment taxes, which is Social Security and Medicare. Here, income taxes. Here, self-employment taxes. This amount is used. After that, we put all adjustments. Of course, we're not doing that in this order. I'm just explaining how this system comes with the net income, with AGI, with taxable income, what's in between. We just enter all adjustments. You don't really have to think where they go, but I'm just showing you just to understand how it works. Adjustments, there are quite a few, some of them new. So for example, if you made some contribution to IRA, obviously you can put it here, just IRA, not Roth IRA, because there's a difference. This one would be if you made contribution to IRA, you're not going to be taxed this year, but you're going to be taxed when you withdraw your money when you retired. Tax Roth IRA, we don't put in adjustments because the amount is taxed the year you contributed money. But then when you retired, you can withdraw without paying any taxes. So then if you bought your own medical insurance, so you can also put premium in the deductions. If you have a student loan and whatever interest rate you got for the year, you can put up to 2,500 in deductions. This is our new tip, up to 25,000 you can put in deductions. And then if you have a car loan, also interest rate that you get, you know, the sum of interest rate for the year, you can put in deductions up to $10,000. If you have alimony, but only if you got divorced and made that agreement about alimony before year of 2019. So now seniors 65 plus, this is new deduction. Usually seniors would get additional personal deduction over here, but now in adjustments they have this additional. Altogether it's 8,000, but it doesn't matter where it is. For the before, if you will have 2,060 for people 65 plus over here, but now they added over here, which means you can lower your AGI, and that's important because you might be qualified for some credits if you lower your AGI, adjusted gross income. So that's for people. You don't have to do anything. The program knows your age, obviously. It will be calculated into deductions automatically. And half of our self-employment taxes. Again, you don't have to do anything about it. After the system calculates net income and your Social Security and Medicare taxes, it just takes half and puts it into the deductions. So after we finished with deductions, with adjustments, we get to AGI. Again, as I said, this number is important because the program uses it to determine if you qualified for credits. After that, we subtract personal deduction. Again, you can, like with miles, you can do standard or itemized deduction. Same here, you can do standard or itemized deduction. So standard deduction for a single person, I think it's 15,000 and something, let's say 16. And then plus 2,000 if you're 65 plus. After subtracting this one, that's how we get to taxable income. And on this one, you will pay income taxes. Now, I just want to go through like an example with numbers. Hopefully it will be maybe a little bit easier. So more visual. How much? Again, I'm not going to take my income. So let's say we take single person, not senior, without kids, who made $60,000 a year. This person decides to do standard deduction for miles. For example, that person drove 30,000 miles, multiplied by 70 cents, we get $21,000. And then that person decides also to do some other business expenses for 1,000. So total 22. We subtract that, we get net income $38,000. So this number is multiplied by approximately 15%, and we get approximately 5,700. So this is our self-employment tax, Social Security and Medicare. Then for the purpose of this example, let's round up to 6. So then the system takes half of it, $3,000, and adds it to adjustments. So this line where we would have all adjustments. But again, just for the purpose of this example, I'm not going to put all of them because you probably, people can use quite a few of those adjustments. We're going to use half of our self-employment taxes and tip, which is new for this year. How I came up with this amount? Just approximately, I took, let's say, tip is 30% of our income. So that's how I came up with 18,000. Now, out of 38, we subtract 18 and 3. We get 17. This is our AGI. And you see, that's where you can see that it's important. For example, if it's a single person, to get earned income credit, AGI has to be below 19 some thousand and something. I don't remember the exact number. So before, without tip deduction, the person would have AGI 38 minus 3, 35, not qualified for earned income credit. Now with tip deduction, we get 17. So this person not going to get maximum earned income credit, but that person will get something. And then we subtract personal deduction, which is approximately 16,000 thousand for a single person, and we get 1,000. This is the amount that will be taxed for income taxes. So of course, if you use more than just half of your self-employment taxes and tip, let's say you bought your own medical insurance, you have car loan interest, so maybe you have another $4,000 in your adjustments, which means here you will end up with negative number. It's not written as negative, it's just going to be 0. But if you subtract 4 from 1, you'll get negative 3,000. Again, it's just going to be 0, but for you, it can be some sort of an indicator that next year, taking, if you don't have big changes in your life, you can easily make not 60 but $63,000 and still kind of end up with 0. So now let's talk a little bit about credits. I already mentioned some, but so there are non-refundable credits and refundable credits. One of the non-refundable credits is child credit. It can be confusing, but the child credit is not given to you. It's used to reduce your taxable income, even if you do have child. For example, I would have 0 over here. I never get like child credit, but we'll talk about other credit later, additional child tax credit. For that one, I am qualified because this child credit is $2,000 per child. Again, is not given to you. If you had, let's say here, $5,000 instead of 1, so the system will use, you would be qualified, and you have a child, the system would give you $2,000 to reduce taxable income. So that's one. Another non-refundable is savers credit. That's when you make contribution to IRA, Roth IRA, even though in adjustments you put just IRA, but savers credit is for any like retirement account. It's not much because it doesn't matter how much you contributed, the system only takes into account $2,000. That's max for one person. And then depending on your net income, you will get either 50% of that, or 20%, or 10%. Let's say this person has income that low enough to get 50%, and this person contributed to IRA $2,000. This person will get 50%, $1,000 as a savers credit, which also will be calculated over here, and we will get 0. Minus $1,000, we'll get 0. Now refundable credits, the one that you get. So, like as I said, I have a child, but I don't get child credit because I never owe any taxes as a low income person. But I get additional child tax credit, which is calculated. They take your net income, they subtract to 2,500, and then the rest of it they multiply by 15%. The amount can be like last year my amount was 1900, but the maximum you get for additional child tax credit 1700. So that's what I usually get instead of child credit. Next one, earned income credit, the one that I already talked about. So when AGI is used, adjusted gross income, to see if you eligible for that one, you can actually see, you can go to IRS website, or you can go into the website. I will put the link into the in the description to this video, where they explain that earned income credit, it's like a bell curve, sort of like it grows, and then it gets at a certain AGI, it becomes maximum, and then it stays maximum until a certain point, and then it just reduces back to zero. Next one is premium tax credit. This is for medical insurance. Not any medical insurance, the one that you get through marketplace.gov. So sometimes what they do, they incorporate this credit into your payments, so you just pay less. Or if it was not done, then you can claim this premium tax credit as refund, as your refund. But you will get form. You don't have to worry about these adjustments, because you will get forms for the ones that you use. If you do have insurance, you'll get form. If you have student loan, you'll get form. Car loan interest, you'll get forms. So you would have all documentations that you need to enter all those numbers. So now and then, I just a few words about basically tax refund, what it consists of. First of all, it will consist of all these credits that you're eligible for. And then let's say throughout the year you were worried that you're going to end up with a lot of taxes at the end of the year, and you were making payments, you were paying taxes in advance. But then somehow, with all these additional deductions, like tip deduction, you end up with zero. So you do not owe anything, but you actually did pay something. So this also will be added to your credits. Advanced taxes that you do not owe, and credits. And it will be some sort of amount. And now it only will depend on how much is your self-employment taxes. Let's say all advanced taxes for this person and all credits that this person qualified came up to $7,000. But this person owes only about $6,000 for Social Security and Medicare. So this person will get $1,000 tax refund. If it's other way around, let's say person didn't make any advanced taxes, and this person qualifies for a little bit of some sort of credit of $2,000. At least this person will pay not $6,000, but only $4,000, minus those credits. So that's how it works. I think I covered everything, but you can ask questions. I would be so happy to answer, because all I can say, I'm not a professional tax preparer, although I do have a lot of education. I have degree in economics. I have certification in investments, bookkeeping, accounting. So it's really kind of sort of my area of competence, but I don't have a certificate of tax preparer, let's say. So I've been doing my own taxes all my life. And when I started doing deliveries, I sit down and I figure out how to do that. And that's what I'm doing, keeping up with updates. And now as I started my YouTube channel, try to share it with you. I have 2 YouTube channels. One is in Russian language for people that live in America but they speak Russian, and one this, and hopefully my accent and didn't put you off, and hopefully you finished watching it, and hopefully you found it somehow useful for you. And ask questions, and I will be happy to answer. And until another time.